Good morning, traders. You're looking at the Aussie dollar CAD, and it's a trade that I've just got in live, and I want to record the outcome of the trade. It's been 3 weeks since I've done any of these recordings, and the simple reason for that is, a lot of you know that I've been away on holiday, so I've not been able to do them. But I'm back now, so I can start recording these videos again. And I actually love recording these videos because I've mentioned time and time again that recording these live trades, but also some of the back testing that I did, has allowed me to go back over the trade and re-watch it and reanalyze it and listen to myself talking through the trade and pick up on things that I'd previously missed. That cannot be more true than when I did the back testing. The number of things that I've picked up on, from just simple things like using the wrong terminology to missing out and maybe taking profits at an even-handled number, or using better stop placement due to a higher structure level. The list is endless, to be honest with you. And when you do your back testing, you're focusing on the trade that you're looking for, and you're not most of the time really taking on board what the market is doing. And so for me, you will inevitably at some point miss something when you're doing your back testing. It might be just once on one trade, but that once on one trade could be the difference of that trade winning and losing, and a good stop placement and not a good stop placement. And for me, it's been absolutely critical, and since I've done that, I've seen a massive turnaround. In fact, I just watched Mike Bellafiore's interview with Jason, and on there he said that one of his top 7-figure traders has started doing recordings like that and then going back and reanalyzing his trade. And I couldn't help but I gave a very, very big smile, because that really reinforced what I'm doing, because I know that it's working for me very, very well, and I'm glad to be home from my holiday, believe it or not, and restart doing these videos again. And I'm looking forward to rewatching all the videos I've done in the past and making more of them and really helping to excel my training. So anyway, what I'd like to do is show you this trade. It's actually a wedge pattern that's set up on the Aussie dollar CAD, so just bear with me while I remove everything, and then I can get on with showing you the trade. Okay, so here we are on the daily time frame, and we've been bearish here. We're actually in a trend, so I'm not going to draw all of them out, but you can see new structure low, outside return, new structure low, outside return, new structure low, outside return, expecting a continuation to retest the lows. Now, whether or not we come a little higher and break structure, or we simply just come up to retest the structure highs here and then come down, I don't know. But what I do know is that there's a valid trade which I've entered at the moment. What I'm just going to do is put in a structure line just where the candles have closed on the daily and just zoom out. And you can see here that we actually have room to go lower down to this next VS1 level, down at around 93.74s. So we are in a trend and we do have room to come lower. So if I drop to the 240, this is where the actual trade setup is. Oh, let me take those off. And so here we have a lovely fluid and directional move lower. We have pretty much the same thing going that way and the same thing again going this way. So it's looking like this. And whenever I see this lovely fluid movement, this is where I want to look for my breakout patterns. This one is a wedge pattern. To be valid, a touch, a touch, a touch, and a touch. So 2 touches either side. We have a valid directional pole. We have made, well, in this situation, for me to play for extended targets, we must have either a new structure low, which this is what this is, or an initial structure low, which would then give me a reason to play for an extension, which I will be doing on this particular trade. Now, as you can see, we've come up here and we've tested this trend line multiple times. and what we've just had is a lower low, lower close on the 4 hourly, which will be my entry. So in this instance, stops will go above the swing high. The ATR is 23, so stops will be 23 above this zone, and targets will be a retest of the candle lows here, just 5 pips above it, and then I will be playing for an extension because we do have a new structure low, and that will come in at the 127. I will not be playing for targets past the 127 purely because it's coming into that VS1 zone and that structure level. So that is down there. So we're looking at a risk of, that's going to give me 87. It's going to give me a risk of this amount. Oh, that's the wrong colour, it should be red. Targets are going to be 5 pips above here, so it's going to give me 37. Make that one green. Target 2s are going to be looking very tasty, just there. However, I am just going to go back out to the dailies, and I believe I wanted my targets not quite at the 127. Yeah, I wanted them at that VS1 level, which is, I'm going to go, yeah, dead on the VS1 level there at 93.70s. So 93.70s for targets. 93.70s. That's going to give me them there. Okay, so this is looking like we are risking 64 pips. For 88, I'm just going to make that yellow, and then target 2s 127. So I could play for the 127 there. That is certainly always my default, but because of the size of this trade, the very good risk to reward that we have, particularly when you look at secondary targets, and it being a new structure low and not just an initial structure low, for me, I have a higher probability of hitting those second targets. So that is the trade as it stands. What there also is if you want a little bit more confirmation, we can drop down to the 60-minute time frame, and if we zoom in, we can see that we had a rally, particularly this momentum candle, a pullback. We came up, we did a test, we came down, we retested this candle high, came and retested here, giving us a double top. We then made a break to the downside. So you can look at this as a 26.18. You can see that we did just go overbought there at 81. We've got divergence, though for me it isn't at a structure level that I would take a double top, but nevertheless one has formed there. And what you can also look at here is that this is also now a head and shoulders, and so we can look at the market continuing down to retest the neck here. And potentially see it coming down to retest the lows here. So certainly as well on the 60-minute time frame, it could look as though we're getting this reaction. And don't forget, on the 4 hourly, we also have just formed a lower low, lower close candle on the 10 o'clock candle. Now you can wait for a little bit more of a conservative entry because we've had the break below close below here. You could wait for a pullback, maybe to that 618 for a 26.18, and then a continuation to the downside. Just depends how you want to look at this, but a confluence there on the 60-minute and then on the 240 as well. So I will release this video into the syndicate, but what I'll do is I will also then later add on the outcome of the trade and repost the video later. And we're back. I just want to do a little interim video before either the stop is hit or targets are hit, and this is a very big trade for the Aussie dollar CAD, and this is when your emotions will start to kick in and really start to test if you have the ability to see the trade through, or whether or not you're going to go ahead and sabotage the trade. And if you see what we've done here, we came all the way down to this zone and then stopped and then rallied all the way back, and there's a difference here in price of 67 pips. So I am 67 pips worse off now than I was at the lowest point. And at this stage, as a trader, you could be feeling that, oh, the trade is now going against me, maybe I should exit the position, maybe I was wrong, we're not going to get second targets, look, we clearly have a higher high, higher close here. But it's important to understand that I was expecting this retracement, because the market never ever moves in one direction. You know, the market moves up, you see a retracement, market moves up, you see a retracement, the market moves up. So I'm expecting this retracement, but at the same time, while I do not want to put too much emphasis on the hope that it's going to go ahead and hit, I'm trying to keep my bias 50-50. If it wins, it wins. If it loses, it loses. But I still know, or at least I still, based on my back testing and on this current setup, I still know I have a higher chance of it going to hit my targets than hitting my stop loss. And there's a few reasons for that. If we look at what price action did, we came all the way down here, we saw a little retracement, and we made another low. Now if you look left, we have actually made a break below, close below, or a violation. We have closed below the main swing, indicating we could go lower. Now on the daily time frame we haven't, but on the 4 hourly we have. And the other thing that I'm making a note of is the fact that, look at where my stop is. It is all the way up here. Now for this market to come all the way down and then to go all the way back up to here, have to violate this level and go even higher, violating the 9500s level, and go higher still to hit my stop? Or do you think that it could continue lower, given the fact that we have now made a new low below here? So this retracement is very much expected. Some people I know are also in a Gartley pattern here. This was something I was aware of but could not get involved in, simply because I was already short this particular pair. And so one thing I can look at is that if the trade goes on to win, we could see that coming up into the 382, possibly the 9500 psychological number, possibly spiking through it and potentially turning around and coming lower. So there's nothing to be worried about until I actually get stopped out, and so I will just leave the trade to progress. And we're back for the last section of this video, and I'm very happy to say that secondary targets have been hit for 158 pips. What a trade, what a fantastic trade, especially on the Aussie dollar CAD, which typically doesn't have a very big ATR, but in this instance the trade went on to win. We hit our targets down at 93.73. We did actually come down and hit the 127, but nevertheless I got the targets that I went for, and unfortunately everybody that took the Gartley have now been stopped out. So very pleased with the trade. I think this will make a fantastic video, just talking through the trade itself and dealing with the emotional side of it as well, and one to keep.